Hello again, fairbinaryoptions.com here, and we are on the second part in our Binary Options Academy project, talking about bigger options on binary options trading and how to make use of bigger time frames in order to profitably trade binary options. And we gave the example of, first of all, we clarified what bigger time frames are, what the expiration dates to be used are, and we exemplified on this Euro-US dollar with a possible triangle. And even though it is the monthly chart and nobody trades the monthly chart, but all this period of time, call options should have been favored with bigger expiration dates, because price was supposed to go and pierce the ANC trend line. It is mandatory in this kind of a pattern for the E wave to go and pierce the ANC trend line. So even in here, all these dips low were supposed to be accompanied only by call options. Then what next? Well, you see that even if it is on the monthly chart, this one here formed nothing but a rising wedge as a pattern. Well, we all should wait it for the rising wedge to be broken, or for the 2 to 4 trend line to be broken. By the time that the rising wedge is broken, then it needs to go where? It needs to go and break the 2 to 4, the B2D trend line of a triangle. And there is where the triangle is completed, and that is where the pattern is completed. So what to do? Well, the answer comes on the lower time frames. Weekly chart. By the time that market broke or pierced the ANC trend line, not here but here, this is only a place to go and trade put options. It may be that sometimes you will be ahead of the curve, but you're not trading this call option here, this put option here with end of day, or with 1 hour expiration date, or with 5 minutes. No, this is to be traded with end of week expiration date, with end of month expiration date, as the analysis comes from the bigger time frame. So here is place to go short. Here is only place to trade put options. Here, by the time the 2 to 4 trend line is broken here on the wedge, is another opportunity to go and trade put options. And take a look here, it's not like we were supposed to be taken by surprise. Market stood here for 5 candles, 5 weeks. So end of month, end of week, or even end of day, if you identify the pattern on the lower time frames, should be the case. What would be the pattern on the lower time frames? Well, daily chart. On the daily chart, if we go then on the whole ANC trend line, we see that here market actually formed the triangle of a lower degree. This would be the B2D trend line this time, and this would be the ANC trend line this time. By the time that market broke the B2D trend line, basically here, then there is no point into staying and insisting on a trade or on the trade. But again, trading nothing but put options with end of week, end of day, and end of month expiration date. But then we said from the bigger picture that price needed to go and break the B2D trend line. So this was the B2D trend line, this blue one. Well, all this consolidation area is supposed to be, or was supposed to be, viewed only as a continuation pattern. What kind of a continuation? Still a triangle looks here. This to be the B2D trend line, and this to be the ANC trend line. Again, by the time the ANC trend line is pierced, we should go and trade a put option with end of day, end of month, end of week expiration date. And by the time that the B2D trend line is broken, we can take our hands out of the Euro-US dollar, because we traded it in multiple times based on the bigger time frames. But again, avoiding shorter expiration dates. Thank you for being here, and I hope you enjoyed this one. Make sure you go and check our Binary Options Academy projects on fairbinaryoptions.com. There's much more there related to both bigger expiration dates, both bigger time frames, and how to calibrate the expiration date with the pair and with the asset that is being traded. Thank you, and bye-bye.